95.9, 8 at 21. Let's say good morning there to Gavin Malope from NYT Properties. Welcome.
Good day, George. Happy
oh.
birthday.
Oh, yes. Oh, yes.
18 years,
Happy
my
birthday.
brother. It's a long time.
Yeah.
So both you and Kaya are turning 18.
We are turning 18, which is why we were partying until late night, because we're 18. We are allowed to do that kind of stuff.
Yes.
We are grown up. No, thank you very much. It's been an incredible 18 years, and thanks for joining us. As a matter of fact, you should be welcoming me to your show.
Brother George, welcome.
Thank you very much.
On behalf of our favorite host, Katlego.
Yeah. All right. So, what have we got today? Rental property tax implications and what else?
That's correct,
Yeah.
sir. We're talking about the different. We're talking about the different expenses related to property. So, how do you get taxed? So, for example, George, you know, most people they love property and they like to be investors, okay, but they need to understand what they're getting themselves into. They must not listen to other people. They must listen to the show.
To the expert.
To the experts.
Not while drinking in a pub somewhere.
Where we give them free advice.
All right.
Okay. So, for example, say, the money that you receive every month on your rental property is income. So we all know, once you receive income, SARS has to tax that income. So the question is, how do you get taxed on this income? Yes. So your expenses of a non-capital nature will be deducted from this monthly income. What are we talking about?
Explain that. Yeah.
Yes. What are we talking about? We're talking about, let's say you're getting a rental of 5,000 rand. As an example, obviously that's the income you receive as a landlord. However, you have monthly levies to pay on that property. You have rates and taxes that you have to pay on that property. And like you said earlier on, let's say there's a geyser burst. Hopefully you've got an insurance on that property in instances where the geyser gets to burst. You know, and you don't want to let your tenant down. Okay, because you want to keep your property as habitable as much as possible.
Course, yeah.
Now, sometimes you're sourcing the tenant. Hopefully using an estate agent, then that estate agent will charge you commission to get that tenant. So that expense is of a non-capital capital nature.
All right.
Now, let's talk about expenses of a capital nature. All right. When you acquire that property, okay, that amount, let's say you acquire the property for 1 million, that's capital. Okay. When you pay rates and taxes, okay, not rather rates and taxes, Brother George, that amount that you said is quite expensive for the attorneys.
Oh, yeah, the one that I really hate. Sometimes I don't understand exactly why we are paying that.
So the transfer fees and the bond fees, that's of a capital nature. Okay. Now, we should differentiate between the amount, the non-expense capital nature and the capital nature. For example, if your house is okay, it's a 3-bedroom in Bromov, okay, but you decide to add a cottage and you've been letting this property, that will be of a capital nature.
All right.
You understand? So when you do your tax returns, okay, SARS will deduce, or rather your tax practitioner, okay, will deduce that this expense is of a capital nature or this one is of a non-capital nature. But at least here we gave you the nibbles to understand what is capital nature and what is non-capital nature. Yes, yes. And if, you know, you have a nice driveway, you just decide all of a sudden to change the driveway, okay, that expense is of a capital nature. You understand? So yes, that's what we're talking about today, sir.
All right. Okay. So examples of non-capital expenses. Expenses of a capital nature. Right?
Yes.
You're going to be talking about those additions to a lettable property to increase value, that is capital expenses. How then does this relate to what you put down as tax deductible and non-tax deductible?
Okay, for example, George, everything that is of capital nature, let's say you bought a house for 1 million, then you've added a cottage, and then eventually you've added a driveway on your investment property.
All right.
Okay. Remember, when you sell, we have what we call a capital gains tax. So SARS is going to say, okay, you acquired the property for 1 million, you've made improvement, another 100,000 on the cottage, another 100,000 on the driveway. So all the expenses of a capital nature is 1.2 million.
All right.
So you're selling for 1.5. That means your profit is 300,000. You'll be taxed only on the 300,000.
Don't you think this is where a lot of people actually get it wrong?
You're right.
Because I mean, if I sell my property now at 1.5,
yes,
and I bought it for 1 million,
yes,
I put additions of 500,000, and I sell it for 1,600,000.
yes,
I would be under the impression that I'm going to get taxed on the 1.6.
Yes, I understand.
Not on the 100,000.
That's correct, and that
Yeah.
will be unfair. Remember, the 1.5 will be coming from your pocket. So why will SARS tax you on the money that comes from your pocket? He has already taxed you. That's why the money is in your pocket.
All right.
Yes.
All right.
Yes.
So when submitting your tax returns,
Yes.
what do we need to remember?
Get yourself a tax practitioner and then listen to this. If you've missed, listen to our podcast, which we normally send on Katleho's Facebook page.
All right.
To recap. That's correct, sir.
So, talking about recapping, just before we go into about the sports at 8:20, just the most important points to remember before we go. I know we're going to be podcasting this one here. But
Yes.
yeah, just a quick recap.
Okay,
There.
non-capital nature is sourcing the tenant, rates and taxes, levies, rental agents commission, repairs on your normal wear and tear. Capital nature is anything that increases the value of the property, i.e. adding the cottage. Okay, painting the house does not necessarily make the house
Habitable or
you know,
more comfortable?
it
But in
makes
instances
it more
does, yeah.
comfortable, but it
Okay.
does not really increase the value.
All right.
You know,
Painting doesn't increase the value?
George, every
I'm
7
learning,
years,
sorry. Yeah.
every 7 years you need to paint, sir,
Okay.
isn't it? Because that paint wears off eventually.
Yeah.
So you've been renting this property out.
Yeah.
So the paint has worn off. So you want to restore it. So you can't necessarily say that has increased the value.
Right.
It's different from when you got a property that was dilapidated from the beginning.
Like if you buy it from an auction or
You buy it
kind
from
of
an
thing,
auction.
yeah. Mm.
Yes, then you are increasing value.
All right.
You see, so it's a very thin line between non-capital and capital.
All right.
Yes.
Okay. All right. So, in terms of email, how do we get in touch with you?
Okay, normally you go to our Facebook page, like NYT Properties, you get all the podcasts there, or go to Katleho's page. I always put everything there on Katleho's page.
All right. Great stuff. Okay. That's Mr. Gavin Malope from NYT Properties. Thanks very much for joining us.
Thank you, George.
On Katleho. With Georgie, or is it the other way around? Breakfast with Katleho with the Georgie standing in. Thanks a lot.
Yes.
All right, have a great day. Kai FM time now. It's exactly 8.